How you doing, family? Today, I want to talk to our sellers. If you're thinking about entering into this market, all right, today's market, there's some things that you need to know. All right. Before we get started, make sure you hit that subscribe button so you can receive the notifications for more updates. Let's get to it. All right. So, for sellers, right? The main thing is you need to understand is you have leverage, right? There's a lot of properties out there with a lot of equity. Most sellers are sitting on low interest rates and a lot of equity. All right. But you only have leverage if you are priced right. All right. So that means that overpricing your property, being on the market for longer days than necessary, and having multiple price drops does not help your leverage in today's market. All right. It is very important that you have strategic pricing. All right. And you have professional staging. It's going to be essential in that when navigating these markets. Presentation matters more than ever. All right, so buyers are picky because there's a lot of options out there when it comes to inventory. And for the most part, sellers are in competition with builders. But when sellers, if you making sure that the presentation of your home online is bright, right, professionally, it shows the home right, you will get showings. All right, if the home is not professionally packaged, presented online, then the property is probably going to sit. You're not going to get that many showings. Okay. Interest rates. Interest rates isn't the full story. For the most part, a lot of sellers are sitting on low interest rates. They're being held hostage by those low interest rates and not willing to sell or wanting to sit because they don't want to go into a new property at a 6-7% interest rate. All right. That's understood. That's understandable. But cashing in on the equity can also allow you to relocate, downsize, invest in multi-family, all right, multi-family properties. And so just really removing the full like interest rate like hostage situation, and you look at the opportunities out there. The main thing is that, look, you're sitting on a nest egg of equity, right? If you can utilize that equity to be able to put a larger down payment down beyond your 10%, beyond the 5%, beyond the 3.5%, even beyond the 20% if necessary, to be able to bring your DTI or bring your debt service within the same current range that you now currently have, right? That will be the ideal situation. But also understanding that the more liquid you are in a market where opportunities are growing more and more available, right, is going to put you in a better position to be able to create more cash flow or be able to put that equity to work for you. All right, when opportunities present itself. So don't allow low interest rates to hold you hostage in the home and miss opportunities that shall become available. All right, especially understanding that in today's market, most sellers, homeowners are not living in a home for 30 years, right? Or even 20 years. A lot of homeowners, there's a timeline between anywhere between 5 to 7 years. Most people are either upsizing, downsizing, or relocating, maybe for a job, maybe for family. But so always keep that in mind. Don't be held hostage, missing out on opportunities because of your low interest rate. You do want to be strategic, but don't be held hostage. All right. Renovations, right? Renovations need to be very strategic. We see a lot of sellers, a lot of homeowners right now cashing into the equity, pulling out home equity lines of credit, which is, a great opportunity to be able to utilize that equity. But we do not want to utilize the equity to over improve our homes. All right. For cosmetic updates, you want to stick to fresh paint, fixtures, and landscaping. All right. The necessary minimum that you need to be able to present your home professionally to the market to get the highest and best, right? Over improving your home will not get anything beyond what the market is going to allow you. All right. So today's market is not the market for you to over improve your home. So this means that we need to be looking at our relevant comps very closely to what is ideal upgrades for them. All right. Also looking at new construction. What are new construction upgrade options and how the homes are presented? These are going to be some of the categories or some of the things that we need to be aligning with when we're talking about upgrades and making sure that we don't over upgrade. Even being in line with a new construction property doesn't necessarily make you equal to that new construction property because it is a new construction property. So don't always look at what new construction upgrades are being offered and think that those are the upgrades that you need to match when you're upgrading your home to bring it to the market. All right. Short-term rentals are impacting neighborhood home values. Like when you're in a tourist-friendly zones, or sellers should be marketing to like investors or short-term rental operators. Right, this is going to allow the investor or potential buyers to see the real potential that your home have. We see a lot of properties going for sale in these short-term rental communities, but it doesn't always mean that you're going to get the highest and best value because your property is zoned for short-term rental. But when you strategically market to short-term rental operators or investors, then you may get a better value. And also for the homeowners who are in these short-term rental areas, I would say I would stay away from trying to upgrade, pulling equity to upgrade my property. Again, if I'm going to upgrade it, I'm going to do the bare minimum. All right, I'm going to do just the necessary, like fresh paint, fixtures, and landscaping. Because if you're selling it to a short-term rental operator, more than likely they don't care about the current upgrades because they're going to renovate their property and bring it up to their hotel standards. All right, so let's not over improve. All right, or I want to say misuse our equity, thinking that it's going to help our home sell for more money. All right, so let's see here. Before we wrap up, I think it's good to know that millennials are dominating the buyer pool. All right, so modern finishes and energy efficiency, modern finishes, and tech homes, right? Those are going to be attractive to some of the buyer pools of the millennials. Relocation buyers from high cost states like New York and California, they still have a driving demand in the Sun Belt states. New construction inventory, right? New construction timelines and premiums still present hurdles for buyers. So you still have opportunities to compete against new construction with the timelines, right? And so don't feel that just because you're in competition with new construction, buyers are not interested. All right, cash buyers and investors are still active in the market. And as I was mentioning earlier, it's good to be liquid in today's market because there's going to be a lot of opportunities coming. And you just want to be in a position to where you can capitalize on those opportunities. And also, I just like to remind sellers that for those who are cashing in on equity and pulling home equity lines of credit, all right, in those situations, remember, every time you pull a home equity line of credit, it does increase your DTI, right? It lowers your DTI, so or it increases your DTI, debt to income ratio. So understand that, because I see some I'm hearing investors or sellers pulling equity to go and invest, and or to go and keep the current home as an investment and to purchase another home. But it's understanding that HELOC, it still affects your debt to income ratio on the new purchase. All right, so all of that really matters. So my final advice for sellers in this current market is be flexible. All right, be open to creative deals such as interest rates, buy downs, seller credits, or extended closings. Those are going to be necessary in today's market to be able to compensate or to be able to present a more attractive listing to potential buyers that need that flexibility. And also understand that the market isn't crashing, it's shifting. All right, so be prepared in this phase and don't panic. Look, I'm Emmett Combs with Combs Premier. If you're in the market or thinking about selling your home and you want a current market analysis of your home's true value, be sure to reach out to us. We look for the opportunity to earn your business. 786-277-1190. We'll see you soon.